Welcome back to Mr. Money TV, the channel which makes financial education fun. If you're starting stock investing and you're worried about making mistakes, don't go anywhere because I will share with you the 5 stock investing mistakes and hopefully you will avoid them. But before that, don't avoid this button here. Done? Alright, let's go. Number 1, over diversification. You've probably heard everyone and even your cat say not to put all your eggs in one basket, and that is called diversification. This is a practice commonly done to manage risk levels. However, like anything in life, too much of a good thing can be bad. When I started investing, I deposited 3,000 ringgit and that felt like a lot to me. I didn't really know anything about stock analysis, so I bought 10 different stocks using, well, my common sense. So let's do some quick math. 3,000 ringgit divided by 10 stocks would mean 300 ringgit allocated into each, assuming I divided the money equally. But obviously that wasn't the case lah. That meant very little money into each stock because some were more expensive than others. To avoid over diversifying, if you're going to start investing with less than 10,000 ringgit, pick no more than 3 stocks to invest in. That way the gain you make will be significant and you will make full use of that brokerage cost you're going to pay for anyway. Number 2, making too many trades. We all went through MCO 1, right? Work from home became a norm, and so like everyone else, I also had a lot of free time. So I spent that free time staring at my stock trading platform and I started getting itchy to make more trades. As I made more trades, I didn't realize that the brokerage fees were slowly piling up, and at the end of it, the amount of money I gave my brokerage probably ate half of what I could have profited if I just sat quietly. So don't make so many trades lah. Study a company well and be focused on being in it for the long term. You should have a clear purpose in every buy and sell order you make. Number 3, FOMO, also known as fear of missing out. I tell you lah, 2020 was a crazy year for stock investing because anything you bought would have made you a profit. But profit where got enough one? We want big profit, right? What happens when you earn 20% profit but you see your friend on another stock flying up by 50%? Shock lah kan, right? You also want to jump in and ride that wave. You get emotional, and when you get emotional, you make silly mistakes. So don't FOMO lah bro, okay? Relax and take your time to understand why the stock is moving in price. There are always more opportunities to make money in the stock market. Number 4, using money I didn't have. When I first got my stock trading account, I found this wonderful feature called Contra Trading. Contra Trading means that you can buy and sell a stock without paying for the stock itself. If you profit, you keep the profit, but if you lose, you only pay for the losses. Once upon a time on a Wednesday, I went into a stock that limit up twice in the same week. This means limit up, okay? I was raking in a handsome profit by Friday and I thought, "Aiya, sure up again on Monday one." But no, it almost hit limit down and I panicked big time because I contra bought the stock and there was absolutely no way I could ever pay up for that loss. It actually came to a point where my broker called my phone to notify me that my trading account was short of money. Thankfully, I managed to pool my emergency funds together to pay up for it, but it was a very painful lesson very early on. Playing with money that isn't yours is a very slippery slope and many lives and relationships have been broken from this. So the bottom line is that you should only invest with spare cash that you actually have. Number 5, chasing stock tips. When you want to buy a new phone, would you just buy it because your friends said the phone is power? No, right? You would take the time to study it, watch and read reviews to see if it's good or even worth it. Investing is the same thing. It requires time to study and understand companies in depth. However, the temptation to make quick money can be very strong. Who doesn't want to make extra money to have a nice meal on the weekend, right? The thought of earning quick money based on what someone said can be very exciting, but you're more likely to lose than gain. How do you avoid this? Simple. Regardless of who the source of the stock tip is, always do your own research first because it's your money, and also because your friend isn't going to compensate the money you lose. So there you have it, 5 stock investing mistakes I made when I started. If you can only remember one thing from this video, only invest with extra money that you can lose. If you want to know how to invest successfully, check out this video here.